We have Dr. Frederic Murphy, finance professor at the Fox School of Business at Temple University and a former analyst in charge of the medium-term forecasting models of the Energy Information Administration. A couple of months ago, everybody were talking about $150 plus a barrel of oil, some even forecasting about $200 a barrel of oil. Now we are below $60 a barrel of oil. What factors were considered when forecasting oil and gas prices for the administration?
Well, that $150 forecast, I think, was actually Morgan forecasting it. The administration has, I think, had a much more tempered forecast, although the short-term forecasts have, been remarkably bad over the past several years. And the reason for that is the dynamics of the market have been somewhat different from prior history in that previous oil price run-ups have been associated with war and revolution, and this run-up has been associated with economic activity and world growth. Now we're in a recession or a decline, and we're seeing a drop in oil consumption. The price has gone down in a way that people weren't expecting just a few months ago.
No, what factors were considered? Did you guys forecast the economic the demand for oil over the whole situation in the economy, or like what factors in general?
What factors into oil demand is economic growth and price and also a certain amount of technology change and conservation change. For example, in terms of fleet efficiency of the automobiles, the total fleet efficiency in the U.S. had been going down until very recently because of the shift of market share from lighter vehicles to heavier vehicles. And interestingly, the worst declines came in the Japanese automakers as they moved from their smaller cars to SUVs and larger sedans. But at the same time, the engine improvements have been such that there's been a huge increase in efficiency of automobiles of the same horsepower and weight. So you have these two factors going on, increasing incomes and technology change. And that's what affected the automobile industry. Now, with the world prices being determined by factors that were not very important just 10 years ago. If you remember, 10 years ago, the price of oil had dropped in the $10, $15 a barrel range, and that was because China was not a factor in the world market. The Russian economy was continuing to collapse from the end of the Soviet Union and a command economy. And Southeast Asia went into a depression. And since then, prices have been recovering because Russia has been recovering, Southeast Asia has recovered, and China has been the remarkable growth story for the past decade.
If you were working on your models when were you at the Energy Information Administration?
I was there from 1975 to 1982, and I've had periodic consulting relationships with them ever since.
Okay, let's say, for example, today, what would your models say about the price of oil?
If I were doing a medium-term forecast, I would be focusing on standard technologies with improvements in conservation. If you look at the old forecast, the biggest mistakes was underestimating the amount of conservation that would take place. And it's gone on because of, again, mostly information technology. What I would look at is the price, and I would look at domestic production of oil and world production, and and the kinds of discoveries that have been taking place domestically and around the world.
So, medium-term forecast, what is that like? Well, what's the time frame?
5 to really say 20 years from now.
20 years from now. So, put that in dollar terms.
In dollar terms for the oil,
Right.
well, if you're talking about, say, actually I should say 2 to 20 years, then you're talking in terms of, getting more about, you're focused more on sort of the long-run trends as opposed to the short-run phenomena. And there, what you're looking at is, decline in U.S. oil production. And oil production in the U.S. is, I haven't looked at the numbers recently, but it's probably around 6.5 million, 7 million barrels a day. And then imports are on the order of, they've been dropping. So they're probably in the order of 11 million barrels a day, maybe 12. And so, our most recent 5% decline in imports has really meant, a big drop in our oil bill, which is really quite substantial. What kinds of numbers are you looking for?
Price of crude oil per barrel.
Well, this is not an Energy Information Administration forecast. This is my personal forecast.
Okay.
We have a low because there's a world recession coming on, and the big uncertainty now is how long will that will slow world growth continue? And and the forecasters are saying, through 2009 and probably recovery in 2010. What that means is that you'll start to see the oil demand increase again. And also, when we're talking about world recession, we're basically talking about slower growth in China and India, and recession in Japan, Europe, and North America. And so the countries that are growing with a higher share of energy consumption in their GDP. So I would expect the oil prices to recover, say, in the next few years, they're probably going to get back up to, say, anywhere the 80 to 120, 130 price range. And it just depends on the level of economic growth. The big factor also is that there have been no announcements of huge new discoveries of oil, and so that means that it's unlikely we're going to see large increases in supply outside of the OPEC countries, which would also bias the forecast upward.
That is Dr. Frederic Murphy, finance professor at the Fox School of Business at Temple University in Philadelphia, and I'm John Hanna here in New York.